Hi, welcome to the Market Alert for Friday, the 21st of February 2020. So, European closed sparks buying panic, bid after morning Momo massacre. So, the momentum stocks were sent to the downside, but as soon as the European markets closed, prices were then moved back to the upside, only by 50% though. So yesterday, you can see there the market selling off. No surprise, as I said yesterday, there's nothing really to move the market to the upside unless Powell announces some form of QE or a drop in interest rates. It's tired. It's been manipulated. It's still being manipulated. And the question is, how much longer can they hold the market at these levels? On the Zero Hedge website, even the banks are talking about overvaluations, a decent correction required. But as I said, they'll do whatever they can to try and keep the market on the highs. But eventually they will have to succumb, as they did in 2000 with the then Nasdaq bubble that we saw then, and the Nasdaq making new highs all the time at the moment. So back at the 76% retracement on the overnight, below the 20 bar moving average. We're also above the 20 bar MA as well on the implied volatility. So again, just to close below the 20 bar moving average, we traded down to it yesterday, but we didn't close below it, is required for this market to move to the downside and be in what I would call the first phase of the correction, like we saw here. But they soon brought it back. The question is, can they bring it back? If they print enough money, certainly. But this market is looking and feeling weak. That's for sure. So yesterday we saw the market trading up to begin with, and then all of a sudden it let rip to the downside, with the market dropping 100, 200, 300 points. We see some buying coming into the market and profit taking there. We get a 76% retracement, and then the market is brought back by buying 50%, I would say. That looks around about 50%, certainly not 76% from the high to the low. It's not far off, but 62% then we'll go with to this level below the 200 MA, and overnight the market moving lower as well, attempting to reverse and move to the upside. So it's certainly going to be interesting to see what these central bankers and clowns can do in order to bring the market back up during today. News today, what have we got? German flash. And this doesn't take into account the fact of what's happening in China as well, where all of their economic data is falling off a cliff. The GDP is cratering, and they're printing trillions to keep the system moving as it is at the moment. So, and that's as a result of not just the coronavirus, but also the fall in demand and supply, as we saw in the Baltic Dry Index last week, which also has fallen off a cliff as well. As I said last year, once the yield curve inverts, which is what we saw by June of this year, we will be in a recession. Well, that's the US is what I'm talking about, and no doubt the knock-on effects globally will also impact here in the UK. I did warn last year, did the statistics on it all, and if we have a look, let me just get you the long-term chart of the 10-year, 3-month year. Right, here you go. Just a reminder, once the yield curve inverts, the blue lines show you how quickly the recession can follow, and this is where we are. It's interesting to see that we had another dip in the inversion of the yield curve prior to this collapse, and also that wasn't the dot-com bubble, that's the dot-com bubble. This is the 87-89 crash, where it inverted once more. We had some inversions there, then a big one, but it's interesting that we have this similar pattern here. So, like I said before, it follows around 12 to 18 months later, and this obviously taking place last year, kicking off in May of last year. So by the end of summer, things are going to look a bit sticky, if not before. Somewhere around March, I would expect. Well, we're in February now, next month. some sort of major pullback in the markets at this stage. But certainly not looking too good as far as trying to get to the all-time highs again at the moment. The 30,000, they'll probably attempt it, but after that, without massive QE and liquidity provided by central banks, the market is looking tired and struggling and in need of a major correction at this stage. Okay, that will do it for this one. Bitcoin's not doing a lot. Like I say, the main area of volatility is going to be the stock market, that's for sure. As we saw yesterday, 300-point swing to the downside and then 150 points back and more. So there's a lot to be made in this market at the moment, as prices are going to ebb and flow and the volatility increase. And with that, thanks for watching. See you in the next.